Now, let's break things down before we officially begin. Before we start talking about entries, exits, making money, and all of that, we need to start here because this is the foundation for everything. If you do not understand what you're looking at, nothing else is going to make sense. No strategy, no setup, nothing. So let's slow everything down and build this from the ground up. When you open a chart, what you're actually looking at is simply price. You're just looking at price movement over time. This is it. It's nothing fancy and nothing complicated. It's simply just price moving. Price moving up, down, back and forth over time. I want you to understand that a lot of confusion comes from overcomplicating things in trading. At the core, a chart is just a visual. Charts are showing you what price has been doing. That is all. Now, let's define price. Price is just the current value of something. So if you're looking at something like the S&P 500, that number you see on the side of the chart, that is the price. And that number is constantly changing. Every second, every minute, all day. Now, the real question is why? Why does price move all the time? Why does it move at all? And the question is very simple, because people are buying and people are selling. This is it. There's really no mystery behind it. There's no hidden secret, just buyers and sellers. When there's more people buying, price goes up. When there's more people selling, price goes down. This is the entire foundation of the market. Now, instead of showing all of this movement as just a messy line, we use something called candlesticks. That word can sound a little technical, but I promise you it's actually very simple. A candlestick is just a way to show you what price did during a specific time. This is it. Each candle is like a small story. It shows you where price started, where it moved, and where it ended, all in one shape. So instead of guessing what happened, you can literally see what happened. Because once you understand this, and this is important because this is where things start to change. You are no longer just looking at random movements. You're actually starting to read what the market is doing. And this is the goal. Not to be perfect, not to understand everything instantly, because that's not going to happen, but to start seeing a little bit clearer than you did before. Because clarity leads to confidence, and confidence leads to better decision making. And better decision making leads to better results, which equals profits, which we like. So please don't worry if this feels simple. It's supposed to be. Simplicity is good. Simplicity is what actually works. We want to build strong foundations right now, so everything else becomes easier later. In the next lesson, we're going to break down candlesticks even further. I'm going to show you exactly how to read them step by step. And once you get that, you're going to start looking at charts in a completely different way. What a candlestick shows. The candlestick represents price movement over a set period of time. This time frame can be from 1 minute, or it can be 5 minutes, or an hour, or even a full day time frame. Each candlestick can be a red candle, or it can be a green candle. When looking at this chart, each individual candle represents the unit of time you selected, the time frame you picked. Each candle only records 4 things, which is 4 important price information. It records the open, the high, the low, and the close within the time frame you picked. The bodies of the candles shows where price opened and closed. For green candles, the closing always higher than the open price, which means buyers finished within the time frame you selected in the control. If the closing price is lower than the open price, the candle will be red, which means the sellers within the time frame you selected finished in control. Buyers are called bulls and sellers are called bears. The thin lines that you see above and below the candle bodies show how traders tried to push price further up or further down but failed. These thin lines are called wicks. Wicks basically are evidence of a failed attempt to go higher or to go lower. Buyers tried to push the price higher, but they could not hold it, and price was rejected, creating a wick above the body. Or sellers tried to push the price lower, but they could not hold it, and price was rejected, creating a wick below the candle bodies. Charts are read from left to right, just like you're reading a book. The next candlestick that forms usually opens right at the same price or the same level as the previous candle close. Here are some common mistakes beginners make. When they see a green candle, they think automatically, oh, it's going up, let me buy it immediately. Or they see a red candle and they think, it's going down, let me sell immediately. But you must understand, one candle by itself does not tell the whole story. It's just one piece of information. If you react to every single candle, you're going to get chopped out. Instead of reacting immediately, you want to observe. You want to understand the story, not just the moment. Again, please don't worry about being perfect here. You do not need to memorize anything, and you absolutely do not need to get it instantly. The goal right now is simply just to start recognizing what you're seeing. Again, green equals buyers, red equals sellers, and candles equals the story of what price just did. This is all. Keep it simple. Because again, the simpler this is in your mind, the easier everything will become. So now that you understand what candles are and what they're showing you, we're going to go to the next step, because candles by themselves are just individual stories. But when you put them all together, they form structure. And structure is where real understanding begins. So in the next lesson, we're going to break down trend lines and how price actually moved over time. And this is where things really start to click. Okay, so now that you've watched the video, you now understand the basics of candlesticks. But let's review it again, just for clarity. So instead of price being shown as just a line, we use candlesticks. And again, each candlestick represents a specific amount of time. This depends on your time frame, the one that you pick. And again, that time frame you pick can represent 1 minute, 5 minutes, 1 hour, or even a full day. But no matter the time frame, the idea is the same. Each candle is telling you a story about what price did during that specific time. Now, to continue our summary, let's break down what candles actually show again. Remember, as the video stated, every single candle has 4 main parts. It shows you where price started, where price moved to, where price went at its highest, and where price went at its lowest. This is it. 4 simple pieces of information. And once you understand that, you are no longer just looking at shapes, you are reading information. Now visually, you'll see again a body and something like lines coming out of it. These lines again are called wicks. The bodies show you where price opened and closed, and the wicks show you how far price moved during that time. Now let's do a refresher on colors, because this is what can make things a little bit easier to read. If a candle is green, this means price closed higher than where it started. So during that time, buyers were in control and price moved up. Now, if the candle is red, on the other hand, this means price closed lower than where it started. So during that time, sellers were in control and price moved down. This is it. Again, green equals buyers and red equals sellers. Nothing's complicated. For some trading platforms, it allows you to change the colors to accommodate people who are colorblind, or if you have a color preference. But for this lesson, we're going to stick with green and red. Now here is where all this becomes powerful. Candles are not just shapes. They're telling you what happened between buyers and sellers. So when you see a strong green candle, it's telling you that buyers pushed price up with strength. And when you see a strong red candle, it's telling you sellers pushed price down with strength. And when you start to see smaller candles or candles with long wicks, that can actually mean hesitation or indecision, which can indicate that the market is slowing down. So instead of just looking at candles as colors, start asking yourself, who is actually in control right now. Is it the buyers or is it the sellers? Because that's what you're really trying to understand. All right, now we're getting into something really important. Up to this point, you now understand what a chart is, you understand candles, and you understand how price moves and trends. Now we're going to answer this very important question. Where does price actually react? Because price doesn't just move randomly forever. It moves when it reacts, when it pauses, when it turns, and when it slows down. And these moments happen at specific areas. And those areas are what we call support and resistance. So let's break this down simply. Let's start with support. What is support? Support is an area where price tends to stop falling and start to bounce. So when price is moving down, it reaches a level where buyers step in and they push price back up. This level becomes support. Now here's the important part. Support is not just a random line. It's an area where buyers have shown interest before. So when price comes back to that area again, there's a high chance it will react again. But it's not guaranteed, but it's possible. And that is what we're watching for. What is resistance? Now let's look at resistance. Resistance is the opposite. It's an area where price tends to stop going up and start to drop. So when price is moving up and it reaches a level where sellers step in, they push price back down. That level becomes resistance. And again, this is also not random. It's an area where sellers have reacted before. So when price comes back to this area, we pay attention. Why these levels matter? Now this is where things start to click. Support and resistance matter because they show you where decision happened. These areas where buyers and sellers met, price slowed down, and the market decided what to do next. So instead of looking at the entire chart and feeling overwhelmed, you can focus on key areas that simplify everything. Thank you for watching. Stay tuned for more simplified trading content.